If you have been having some troubles trying to find the best entry for your trades, or you have been going in deep drawdown every time you enter a trade or price stops you out before moving to your target, welcome to this exciting video where I'll be teaching you about the price action entry techniques that you can use so that you can understand how to get into the market at a very precise level and have the best entries at all given time. In this video, I'll be showing you how to use the right entry techniques for the right trade setup. So I want you to put away every form of distraction, make sure you pay attention to the end of the video, and make sure you keep away anything that will distract you, because I promise you this video is 100% filled with the appropriate knowledge you need to get the best entries when trading the foreign exchange markets. Before we dive into the entry techniques, I would like to tell you that there is an ongoing rewards program at Learnity where you get to watch, learn, and earn with us at Learnity. All you simply need to do is use the link in the description, head on to the homepage of Learnity, make sure to sign up an account, and then once you're signed up, you can go into the rewards section, watch the educational videos that are embedded in the rewards segment, get as much Learnity token as you can, and then you get yourself an amazing reward. There are different rewards to be gotten. There are different rewards that you can get: cash rewards, trading bonuses, trading vouchers, and so many other amazing gifts and bonuses and also rewards. All right, so waste no time, use the link in the description below to get started. In this video, I'm going to be talking about two types of entry techniques that I personally use, and these are my best two entry techniques. Now, one is the pullback entry and one is the breakout entry, and I will explain the both of them as quick as I can. So the first one, which is the pullback, is the one I like using because this gives me a very average price to get into the market of any particular currency pair that I am trading. What is this pullback strategy? It is simply me waiting for price to run into my limit order or into a discount for me to buy from, or run into a premium for me to sell from. That is simply my pullback entry that I use. Now, to explain this, I would need a live price chart. Now, on this live price chart, we have the euro paired with the United States dollar, which is one of the most traded currency pair. Now, how will I use this pullback entry technique? First, I want to see price go to a level where I want to buy or sell from. What are these levels that you might want to buy or sell from? These are your support or resistance level. Now you might be asking, okay, how do you identify your support or your resistance level? Your support level or your resistance level can be an old low or an old high. It can be a fair value gap, or it can even be an order block. All right, so whichever PD array you want to use, if you are a student or an ICT trader, then you might understand what an order block is, or a fair value gap, or a breaker block, or a mitigation block is. All right, you can understand all of those. Now, if you do not understand that, then I'm sorry, you need to learn about what these PD arrays are and what they mean so that you'll be able to use them. All right, so that aside, in this particular asset right here, if I was trading this, how would I have gotten into this trade over here? First, we can see that on the daily time frame we have an old high over here. All right, we have this old high over here, and one thing we know, for those of you who use supply and demand, all right, or support and resistance, you might consider this what a supply zone, all right, because this had a rapid movement away from this point here. So it definitely means that there was some momentum, or there was some liquidity injection at this point that made price move with this great speed, moving below this low and continuing going lower. All right, now once price gets into this point, I'll be looking for evidence to make me want to go short. All right, the first thing I want to see is I want to see a rejection from that high, and then I'll be wanting to sell. All right, so we saw price tap into this high. It retraced a little bit, but then did not go lower, and then we saw price come back and traded above this high that traded above this old high over here. And now this is where it gets interesting, because if price was bullish, it should break out this high with great momentum and speed, since it has already taken out previous liquidity that was resting above this high. All right, so we saw price come into that area again and rejected it. All right, now this is giving us a signal that price is not actually strong enough to continue the uptrend. And this is where we would now be looking for a breakdown to buy from. Now, once you see price trade below this last up close candle that actually took out this old high over here, which was an high that actually took out the previous liquidity of that supply area. Once you see price trade and close below that last up close thick candle, this becomes our order block, and this is where I set my limit order. All right, so I'm going to use the body of this order block, set my limit order at this point, and my stop loss will go above the high of this order block. So it should look something like this. All right, set my stop loss at the high of the order block, or just a little bit above it, and then I target all the old lows to this point, to this point, and to this point over here. This is how the trade would be. Now at this time it is in hindsight, but then you already would know what you're looking for, so you would use a limit order, set your limit order at this point right here, wait for price to target, and then wait for it to run lower, and that will just be an amazing trade. And you can see how it immediately reacted from that point. All right, so this is my pullback entry that I use. So first I want to see price reject from my support or resistance area and show me a great momentum, and then I would use that to set my pullback or my limit order before I take my trade. Before I talk about the second entry, let us take 1 minute to talk about Exness. Exness is one of the world's largest retail brokerage firms that you can actually benefit from their better than market condition. They provide you with the best spreads, especially on commodities like gold and even on silver. You have ultra fast execution. Your executions will be done within milliseconds. All right, and there are no hidden charges, no overnight fees, no swap fees. You can actually hold a trade over the weekend and you are not charged any commission on holding this trade. You have 24/7 live support, where if you have any complaints, you can actually lay them out and they will be there to actually respond to you. And this is a very reliable platform because I personally use them and have never had an issue with Exness. Now the amazing thing I love about Exness is that their withdrawals are instant, and you can even withdraw on weekends. Yes, you heard me right. While other brokers might actually perform your withdrawals during the week from Monday to Friday, you can actually get paid on a Saturday and on a Sunday. I mean, who doesn't want to flex their profit on a weekend when they can with Exness? So to get started with Exness, all you need to do is use the link in the description below, head on to their website. Make sure you click on register so that you register your account, sign up, follow the prompt, and in less than a minute or two, you would have an account with Exness, and then you start enjoying this numerous benefit the same way I do. Now for the second type of entry technique that I use when trading, which is the breakout entry technique, I usually do not use this most frequent times when I'm trading, but then under the condition where we have a very strong trend, this is when I employ the breakout strategy. All right, the breakout entry technique. So what this simply does is me just waiting for a price to break out from one point and then not waiting for a retracement. Now I'm going to give you guys some key information to note down about this technique. Now when you're using this technique, you need to only use this technique, this entry price technique, when price is in a very strong uptrend or downtrend. You cannot use this technique when price is in a range bound environment, because definitely it would not suit the condition of trading. All right, you can simply use a limit order or a pullback entry when price is not in a strong uptrend or downtrend. All right, so for example, in a gold chart like we have been seeing in the current weeks, you can see that gold has been trending upward and it has been on a very strong uptrend. And most times price will not really come into the entry you are looking for. Price will not always give you that retracement into your order block, into your fair value gap, and into all the levels you are looking to buy from. All right, so what I simply do in these cases, especially when price is in a strong uptrend, is I just buy from the breakout. One downside of this breakout entry is that you would use quite a larger stop loss, all right, compared to the limit entry or the pullback entry. But then you would not miss out on any move because it will enable you to catch most of the moves, right? The only downside is you'll be using a larger stop loss. So the process of the breakout entry technique is quite similar to that of the pullback, like I explained before. So what we want to do is we want to look for an area of support or resistance, demand or supply, or your PDRA levels. All right, so if we know that price is an uptrend and we have been seeing price making higher highs and creating new highs and not going below old lows, right, we'll be expecting price to do what? To continue taking out highs because price is in an uptrend and we want to trade in the direction of the trend. Now, for example, we see price come down into this level here, which was an old low, where price came to take out liquidity, does not expand below the low, right? Just took out liquidity below these two lows and then started trading back up, right? So immediately price started trading back up. This is where we start to scout for our entry. All right, we start to scout for our entry. Now, where would you be scouting for your entry after you have seen this price over here rejecting this old low or this support area? You can see that this actually held price and rejected price from going any lower. So this can be your area of what demand or your support level, right? Whichever one you know that as. And if you can look to the to this side of the market, you can see what we have here. We have a mitigation block. All right, so typically if you were someone who was waiting for price to react from this support level, price trades away from it, you have seen your evidence, now you want to buy and you are waiting for price to come down into the last up close candle, which is your order block, which is one of the best type of entry you can ever have. All right, using an order block entry, right, you can see that you are going to miss this type of entry. All right, you're going to miss on this trade. Now you see price did not come back to our last down close candle before the move higher, before this expansion higher, which is our order block. Now, if we miss out on that move, this is when you want to employ the breakout strategy. Immediately you see price break out from any key level, a retest on an old high should trigger your entry. For example, if we have missed out on this entry here and you see price break above this high, this old high over here, all right, what you simply need to do is just make sure whether on this time frame or on a lower time frame, let price just come back, tap into this old high here, and you are going to be buying from that place. Remember, you're not going to be waiting for price to pull back into a deep discount for you to buy from, because then you might actually miss out on the move. So you're just waiting to buy at that breakout point, where that high where price broke out from, that is what you're actually waiting to buy from. And if you go into the 1 hour time frame, you would see that price actually did touch the high and then continue going higher, right? So you can see it was almost close to that. It did not really touch the high, but it was almost close to that. So you can easily just buy from this point here. Your stop loss will go below a low under this point here, and which is why I say this strategy would actually require you to use quite a high stop loss. All right, so this is what your trade is going to be looking like. And with this strategy, you would be actually aiming for a 1 to 2 or a 1 to 1 or at most a 1 to 3, because you are using a very large stop loss, unlike the pullback entry where you get to enter at a much cheaper price or at a more premium price and you'll be able to target at least 1 to 4, 1 to 5, or even a 1 to 6 in some cases. But with this example, you can be able to ride the trend and then use this and do not worry about missing trade. So guys, these are the two techniques that I use personally when I trade the foreign exchange market and even the crypto market, right? I also employ these techniques in the crypto market. So if you'd like to know more about these techniques, or you would like to know more about an order block, about a mitigation block, how to actually identify ICT PDRAs and use them in your trading, if you want to become a more professional trader, you want to be more advanced, then I suggest you actually take a leap by going to our homepage. Use the link in the description below, get to the Learnity's homepage, go to this course section and just take a course on advanced trading concepts. Alright, so once you take that course, you'll be able to understand what all of these advanced concepts are, how you can use them, how you can actually utilize them to the best of your advantage, and how you can actually use them in making the most money from the foreign exchange market. Also, if you're a newbie and you're just starting out on the foreign exchange market, well, guess what? We at Learnity have some amazing package for you. We are hosting a 5-day free forex training program, especially for beginners. So if you're just starting out, you do not want to miss on this 5-day free forex training program. Alright, so all you simply need to do is use the link in the description, sign up for this program so that you get informed, you get knowledge about the financial market, how to get started, how to trade it, and how to avoid unnecessary losses when it comes to trading the financial markets. And so guys, this brings me to the end of this video. If you're a first time visitor, you are mostly welcome. Do well to give us a thumbs up. Make sure you subscribe, make sure you hit that like button please, so that you do not miss out on any important videos we are going to be posting out next on this platform. And you can also follow us on our social media handles on Instagram, Facebook, and even on TikTok. And all of the social media handles are in the description below. So if you follow us, you can also get to enjoy more educative content about the financial market, be it stocks, crypto, or even the foreign exchange. And until I come your way again, remember to always trade well and trade safe.
Learn and earn with Learnity. Ready to boost your knowledge and get rewarded? With Learnity, every minute you spend learning turns into real rewards. Here's how it works. 1. Sign up or log in to your account. 2. Head over to the Rewards tab in your personal learning area. 3. Watch our free video tutorials and earn Learnity tokens for every minute you spend learning. The more you watch, the more tokens you collect, and those tokens can be redeemed for amazing rewards like gift vouchers, trading bonuses, cash rewards, and more. Don't miss out. Start your learning journey with Learnity today and make every lesson count.